First, the headlines. Asian markets begin the day trading, more or less positive after the US markets were shut owing to Thanksgiving holiday. India will report its second quarter GDP number today. A Bloomberg poll of economists pegs that figure at 4.5%. HDFC Bank appoints a 6-member panel to hunt for Aditya Puri's successor. Puri retires in October of next year. Yes Bank will hold a board meeting today to consider a fundraise. And Uddhav Thackeray is sworn in as Maharashtra's 19th Chief Minister. 6 other cabinet ministers also take oath at Shivaji Park. Well, as the US markets were shut for trading yesterday, let's take a look at what's making headlines across the globe. Yvonne Mann of Bloomberg News brings you the first word headlines.
Japan may rebalance the power of public spending, re-embrace the power of public spending with one of the biggest stimulus packages of the Abe era. Slowing global growth and the higher sales tax and the string of natural disasters have given the government reason to shift toward a mix of fiscal measures and ultra-loose monetary policy. That would be welcome news for the Bank of Japan, which has appeared reluctant to ramp up its own long-running stimulus program.
Fiscal space for the Japanese government is somewhat limited, so that so-called wise spending is I think, required.
President Trump has made a surprise trip to Afghanistan to celebrate Thanksgiving with U.S. troops. He met President Ashraf Ghani and said peace talks have resumed with the Taliban and that he wants to persuade the militants to agree to a ceasefire. The president also confirmed he wants to reduce troop levels to around 8,500 from the current 12,000 and may go further. President Trump also facing a new challenge from North Korea after the launch of what's reported to be a super large missile. South Korea's Yonhap News says the North has tested a multiple rocket launcher, having earlier fired 2 short-range weapons across the Sea of Japan. The firing comes as Pyongyang threatens to abandon stalling nuclear talks unless the U.S. offers concessions before the end of the year. And there's a huge sigh of social media relief for the millions of people desperate to upload photos of their turkey dinners. Facebook and Instagram are up and running again after a Thanksgiving Day outage due to software problems that prevented users globally from using the apps. The hashtag Instagram down was the second most trending topic on Twitter during the access problems. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Yvonne Mann. This is Bloomberg.
All right, let's turn to the Asian markets now. I'm joined live by Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Morning, Rosalind. I see more markets coming on stream right now, and I think there's more red than green on the screen.
It does look that way. Of course, it's Thanksgiving in the US, so not a lot of things for the market to be driven by right now. Volume's fairly thin, so more likely to see bigger swings. And right now we are seeing a swing into negative territory, mostly red on the board, as you mentioned. Now, we have also investors slightly nervous because, of course, there's this threatened retaliation from China because President Trump did sign that Hong Kong bill, but so far no details of that. Now, of course, there are many saying that, well, China's options are pretty limited, given that it can't really push forward any more retaliatory behaviors or sanctions or any kind of way to really punish the US without also harming its own economy. So it's kind of a little bit stuck. Perhaps it's still looking for ideas. So right now, still no details of that, despite the fact they've had a few weeks now to even think or prepare for this eventuality. Of course, this is the last trading day of the month. It does look like right now the markets are turning lower. The MSCI Asia Pacific Index losing 0.25%. We've got the Hang Seng Index, which just opened a short while ago, as you mentioned, losing more than 1%. The Shanghai Composite flat, but down by just under 0.1%. The CSI 300 losing more than 0.1% right now. So far, we've got Japan holding up just about in positive territory. It's still almost flat, so it may not hold on to those gains for much longer. But right now, The Nikkei is up 0.05 and the Topix up by 0.06. We saw industrial production numbers coming in earlier today showing that it fell more than expected in October, sliding 4.2 month on month, matching the worst drop in 5.5 years and falling more than twice as much as economists forecast. So that, of course, on that gloomy export and trade situation that has been pretty much bearing down on the global economy. Korea's the Bank of Korea pretty much is expected held on its rate decision, no cut, so it's at 1.25%. It has already cut twice this year. The Bank of Korea governor has been expressing concerns about prolonged periods of low rates, which could cause a flow of funds into the property market and also risky assets, echoing, of course, the concerns of many central bankers around the world. Right now, the Kospi index is losing 0.8%. We did, however, see that even though the Kospi is trading lower, cosmetics and tourism stocks making a gain because there are expectations that the relationship with China could be improving after it was reported that the Foreign Minister Wang Yi will be making a visit to Seoul for the first time in 5 years. So some of those stocks like Cosmax, Colmar and Amore Pacific all making gains today. A quick look at one stock in Hong Kong though, because we've had months and months of these protests. We've had a lot of tourism and retail stocks really impacted here. One which is actually making gains today is Chow Tai Fook, which is a jeweler that is up by 6.75% at this point early in the session, and that is after its results. The first half net income fell 20.8%. However, it does say it's going to look at reducing advertising and reviewing its store networks in Hong Kong. We've got Citigroup saying that it's going to have a decent rebound in 2021. Maybe that's helping it a little bit. So right now, though, it's up, well, as you see, blipping up again, up by more than 7% at this point in time. So one standout there against a down market pretty much in Hong Kong. And finally, a quick look at the Australian market. ASX 200 is gaining by just about 1/10%. Back to you.
Thanks so much for that, Rosalind. Now, China has reiterated that it will take action following President Donald Trump's decision to sign a bill supporting protesters in Hong Kong. The key question, though, is how will Beijing hit back, and what could that mean for the trade talks between the two countries? Tom McKenzie has more details.
Well, really, it's been the focus on rhetoric so far. So we've had some very strongly worded commentary from officials at the Foreign Ministry saying that the US was meddling in China's affairs, and again, reiterating that they would push back with their own countermeasures. And of course, we're still waiting for the exact details on those. We had some suggestion from the Global Times, the state-backed tabloid, and their editor there tweeting that maybe there would be sanctions put in place on some of the authors, some of the US authors of this bill. Think Marco Rubio, for example. But the idea that he's going to be particularly upset at not being able to travel to China is something that maybe not many lawmakers in the US are going to be taking too seriously. Recent history, of course, suggests that China's bark is worse than its bite when it comes to the US, at least. So you've had the US, of course, putting in place measures around Huawei, around some of the tech companies that are involved in the Xinjiang surveillance state there, and of course arms sales, US arms sales to Taiwan. And on each occasion, China came out with some very strong rhetoric, but didn't really follow up with any concrete measures. Whether or not this case will be different, of course, is what we're focused on, given what we know that territorial issues, the territorial integrity of China is of the utmost importance.
Yeah, we've heard that rhetoric before, strong countermeasures. We heard it again yesterday. What tools, though, Tom, could China actually use?
They do have some tools. Most of them, though, are double-edged swords. So if you think about delaying the trade talks, for example, we all know, of course, looking at the data, that the economy here remains under significant pressure. And of course, we know that Beijing is incentivized to try to get that partial deal to alleviate that pressure. So slow walking the trade talks, they could do that. But again, there's the flip side of the economic pressure here. In terms of other measures, they could, for example, restrict the import of US goods. But most US goods coming into China already have tariffs on, so it's not clear that that would have much of an effect. Then there's the unreliable entities list, something that China's officials have been touting for many months now, that would, if published, effectively restrict some US companies from some sectors here. Again, though, China's really trying to go out of its way on the global stage to attract FDI. So if it was to do that, that could undermine their attempts to attract investment flows. And in terms of the diplomacy, they could do things like make it more difficult to continue to include or impose those those sanctions on countries like Iran and North Korea. So they do have some measures, but again, most of them do have the potential for blowback as well for China. So they're going to be thinking very carefully about how to thread this needle and how to balance this issue. We're waiting, of course, for any more details.
All right, on to the United Kingdom, which is gearing up for elections in December. YouGov, which is the polling agency that correctly predicted the outcome of the 2017 election, expects Boris Johnson's Conservative Party to win the biggest majority it has ever won in over 3 decades. However, Chris Curtis of YouGov told Bloomberg that things may still change. Listen in.
I know we're saying there's going to be a big Conservative majority at the moment, but if you look at the data underlying this, it doesn't need to be a massive shift in terms of the national polls in order to change things. There are 30 seats where we've currently got the Conservatives ahead by less than 5%. Now, if you see the Labour Party starting to squeeze the national polls a bit more, closing the gap, closing the 5% gap in those seats, it's very easy to see how we could end up in a sort of hung parliament territory. Not to say we will, but it's definitely possible.
Do you think voters are voting on Brexit, or are they voting on policies? Is it spending? Or is it just character of the leaders?
I think it's all three. I think Brexit is clearly important. One of the big voter shifts we're seeing is the Conservatives gaining a lot of Leave voters, whilst Labour's not doing so well at that. And that's why we're seeing these big swings in a lot of those Leave seats, these Leave Conservative seats in the North and the Midlands, Labour heartlands, as we'd previously have called them. But I think Labour's going to try in the remaining weeks of this campaign to try and turn the issues back onto the spending things that they know that they poll better on. The NHS being the key example, they've been talking about that a lot. But they still have the crucial difficulty that Boris Johnson is significantly more popular than Jeremy Corbyn, the leader of the opposition, and they'll be hoping to close that gap as well.
All right, let's look at how trade is set up for the December series. Agam Vakil is joining me now to tell you all about the trade setup for the day and also the cues he's picking up from the futures and options space. Good morning, Agam. We closed at lifetime highs yesterday.
Yeah.
How are we looking today?
Well, it's going to be a tough one, Alex, because every day we expect the indices to come off and every day we see the indices make new life highs. But, it's a Friday, and what tends to happen, and this is, of course, purely historical, a lot of this may be anecdotal, is the fact that when you do see a lot of strength, at least a partial amount of traders will look to book profits. Is that the case today? I don't know. Let's wait and watch. But for now, the SGX Nifty is flat. So that's currently at around 12,181. Let's move on and talk about how things have panned out yesterday. As Alex mentioned, Nifty at a life high, closed at a life high of around 12,151. As we saw gains in the mid cap and the small cap indices too, and in tandem with the benchmarks, and it was the same for the banking indices. Of course, the American markets were shut. So when it comes to the fund flow as well, and yet we did see some amount of flurried activity. So we did see about 1,009 crores coming in from FIIs on a net basis, and DIs selling to the tune of 155. So while many are confused at this point in time whether or not the markets have stressed a tad bit, there is always the other party or the other side of the market which suggests that, well, there's more legs to this rally. And you can see that in gains in ICICI Bank, Reliance Industries. Reliance Industries, well, it was a historical day for that, considering it hit the 10 lakh crore mark. In Bharti Infratel, TCS, among others, leading the gains as far as benchmarks go. But let's talk about how things have panned out in the futures and options space. It was expiry, and we did see a significant pickup in rollovers as well, especially given the fact that we saw the Nifty, close at record highs. And, we did see 25% increase in OI, and this was, again, largely unexpected lines. It's the first day of the new series, the same for the banking Nifty. But let's go on and talk about the levels now that we are in December. And for now, we have puts. The 12,000 puts, specifically in this case, the one with the maximum open interest. So it's going to be interesting to watch this one. Moving on the higher end, it's 12,500 for now, but we don't make too much of it. But that's exactly what we saw. We saw writing around the 12,000, 12,100 puts. But when it comes to the WIX, it fell even further, now at the mark of 14. And some may argue these are precariously low levels. They'd actually want the VIX to increase or at least stay around 15, 16. The Nifty put call ratio, I reckon, has also, come off. And actually, it hasn't. It's actually at around 1.77. So it does seem like it's in an overbought zone. Moving on in terms of stocks, Tech Mahindra, Shriram Transport and HCL Technologies looking at substantial change in OI. The most, in fact, LIC Housing Finance is something that we will be watching out for. We have a brokerage which has initiated coverage. And of course, it's the first day of the series, so we're not going to talk about unwinding as such. But Alex, again, even when we have benchmarks hit life highs, there will always be some others who will start taking cautious stances on the markets, and that's probably what could happen in today's job trade.
Thanks so much for that, Agam. Well, let's hope that gives you a little direction. Of course, you can stay with us as market opens, and we'll give you everything that you need to know before trade actually starts. Somit Sarkar is joining me now to tell you all about the stocks in news. Somit, good morning. What's on your list today?
Good morning, Alice. I'll start off with HDFC Bank, where the company has informed that they have formed a panel to identify the successor to the current managing director, that is Aditya Puri, as his term ends in the next 11 months. Indiabulls Housing Finance will also remain in focus because they have informed the exchanges that the MCA filing shows no violation in any of the 5 loans given by the company to Amri Corp, Anil Ambani Group, DLF, Vatika and the Choudhary Group. CLSA on this says that the clarity of the court case and no violations on the MCA filing will improve the access of the company to the debt markets, and they have also increased the target price for Indiabulls Housing Finance by around 100 rupees to 450 rupees. Steel stocks would remain in focus on the back of the Steel Mint report, which says that the Indian steel mills are likely to raise prices by around 500 to 1000 rupees per ton. The price hike will be across flat and long steel products for the month of December, and this will be the second consecutive hike done by the steel companies. CG Power and Solutions, because they have revoked the royalty agreement, and consequently they do not have now any liability towards the payment of brand royalty. Ashoka Buildcon, because they have received a letter of award for development of EPC projects in Uttar Pradesh, and the bid value of this project was close to 1100 crore rupees. Kohinoor Foods, because they have defaulted in an obligation worth nearly 300 crore rupees on borrowings which was provided by Oriental Bank of Commerce. Rico India, now this stock is not traded but would still be an important news to watch out for, because the NCLT has approved the resolution plan submitted by the consortium led by Kalpras Dharamshi and Rekha Jhunjhunwala. Now the resolution plan invokes the merger of Rico India with a new company set up by the investors. Now on the bulk deals, couple of stocks. Firstly, Everest Industries, where HDFC Mutual Fund has sold nearly 3.47 lakh shares in the company, and the promoter was the buyer in this case. And Indiabulls Housing Finance, where Government Pension Fund Global has acquired nearly 31 lakh shares in the company.
All right, thanks so much for that, Somit. The government will release GDP growth data for the July to September quarter today. High-frequency indicators suggest a continued weakness in the economy. But how sharp is the slowdown? Pallavi Nahata sums up what's expected.
India's second quarter GDP numbers come out on Friday. Economists believe that growth will weaken further in Q2 but may bottom out then. A Bloomberg survey of 41 economists have pegged growth at 4.5% from 5% in Q1. GVA2 is expected to moderate to 4.4% from 4.9% in Q1. While the median estimate is of 4.5%, estimates range from 4% to 5.4%. Hugo Erkin of Rabobank estimates GDP to grow by 4%, while Kunal Kundu of Societe Generale is more optimistic at 5.4%. Growth fell to a 6-year low in Q1, dragged down by stagnating investments and a sharp fall in consumption. Since then, core sector industries have shown the steepest contraction in 14 years, while core inflation, which is an indicator of demand conditions, has fallen to a 2-year low. Data compiled by BloombergQuint indicates that apart from government expenditure, other indicators are unlikely to have supported GDP in Q2. Consumer durables and air cargo continued to contract in Q2. Auto sales also deepened its contraction, contracting by 21.5% in Q2 as compared to a contraction of over 12% in Q1. Foreign trade also continued to deteriorate. Consumer non-durables and foreign tourist arrivals continued to grow, albeit at a slower pace of growth than in Q1. Government expenditure, on the other hand, grew by 28% in Q2 after growing by just 2.1% in Q1. With the first half of the year expected to remain weak, a number of forecasters have now projected that GDP for the full financial year will grow at a slower pace than the 6.1% that has been estimated by the central bank. GDP numbers come out on Friday evening. For detailed analysis, log on to BloombergQuint.
All right, watch that number very keenly. You'll find it on the website in the evening post-market hours today. After more than a month of political drama, including a few days of president's rule, Maharashtra finally has a new chief minister. Shiv Sena chief Uddhav Thackeray has sworn in as the 19th chief minister of the state in a grand ceremony at the Shivaji Park in Dadar last evening. Thackeray will be leading the Mahavikas Aghadi coalition with support from the NCP and the Congress. 6 other cabinet ministers, Subhash Desai and Eknath Shinde from the Shiv Sena, Chhagan Bhujbal and Jayant Patil of the NCP, along with Balasaheb Thorat and Nitin Raut of the Congress party, were also sworn in as cabinet ministers yesterday. Leaders from across the political spectrum were present at the event. DMK leader M.K. Stalin, Madhya Pradesh Chief Minister Kamal Nath, Chhattisgarh Chief Minister Bhupesh Baghel, along with former Chief Minister Devendra Fadnavis, were all at the event. Uddhav Thakeray's estranged cousin Raj Thackeray was also present at the occasion. All right, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on BloombergQuint.com. But there are also several stories on the website that you should consider looking at. First up, HDFC Bank yesterday said it has formed a 6-member committee to find a successor to Managing Director Aditya Puri, who is set to retire in October next year. Puri, who will turn 70 next year, will act as an advisor to the search committee. And Aditya Birla Finance became the first company to list a commercial paper on the National Stock Exchange. The paper will mature in February next year. The exchange expects this to help companies make appropriate disclosures on a continuous basis pertaining to these instruments, and which will lead to the deepening of the debt markets in the country. All right, that's all you need to know going into trade today, but do stay tuned. There's a lot more coming up on BloombergQuint.
So people, when they invest